Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. Let's take a look at the stories for the day.
रामू, दो चाय दे यार।
अरे नहीं यार, एक चाय कॉफी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का home loan, I agree with you.
SBI is the banker to every Indian.
It will be the biggest IPO that India has seen so far. Apart from testing the appetite of investors, LIC's stake sale will also add 21,000 crore rupees to the government exchequer. After missing two deadlines, the IPO of India's largest insurer may finally hit the primary market on the 4th of May. Most experts believe that it will get a good response from both retail and institutional investors. Our next report looks into what the street expects from the IPO and whether you should take a slice of the pie.
Securities and Exchange Board of India had given a nod to the initial public offering proposal of LIC last month. While the price band of the issue is expected to be announced today, reports suggest that offer will run between May 4 and May 9. LIC's management and investment bankers will likely embark on roadshows in 6 cities across India where they will meet potential investors and analysts. The cities include Mumbai, New Delhi, Bengaluru, Ahmedabad, Rajkot and Kolkata. The government has nearly halved its fundraising goal for LIC's IPO to $3.9 billion, having had to cut its valuation estimates after feedback from investors. Yet, analysts don't expect the issue to see a blockbuster response from investors amid uncertain market conditions.
So basically, I think it will sail through, but if you are expecting like X multiple subscription, I would be doubting that. But there'll be a fair amount of demand, both from high net worth investors as well as retail investors.
Ajit Mishra of Religare Broking too expects the IPO to enjoy decent traction given its dominant market share in the insurance space.
See, the market sentiments have certainly improved of late, amid this lingering geopolitical situation and the inflation worries. However, yes, the volatility is certainly high and we're just keeping the participants on their toes. But amid all, the excitement is there, when it comes to the LIC IPO. And we believe that, this IPO would receive decent traction thanks to the strong brand connect, which LIC enjoys, and at the same time, its leadership positioning and high industry growth, prospects also augurs well for this IPO.
According to a Business Standard report, most large global investors that the center was wooing for the initial public may give the issue a miss. Earlier, the center had reached out to 180 to 200 large investors that included sovereign wealth funds and those who make investment decisions based on environmental, social, and governance track record. These investors are learned to have committed to consider investing in the insurer's future offerings based on its performance as a listed entity. This comes as the Ukraine war dynamics have made foreign investors skittish. They now see currency risks and anticipate embargoes while considering investing in emerging markets. The US Federal Reserve's hawkish stance has further made them choose a safe haven. But an impressive response from domestic investors and some foreign investors have made the government go ahead with the IPO. Analysts believe that it will lead to a fresh wave of investors entering the market.
I think this IPO will bring in a lot of investors into the market. Okay, you've already seen the number of the Demat accounts which is being opened ahead of this IPO. So obviously it clearly shows that a lot of policy holders will be interested in this IPO.
The public issue is likely to reserve 35% of its offer for retail investors, 10% for policy holders, and 5% for LIC employees. Going forward, the government will look at an additional stake dilution in LIC only after a year of the insurer's listing.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Much like LIC's price band, there is curiosity surrounding Twitter's future course. After land and space, Elon Musk is all set to make his presence felt in the virtual world. The world's richest man, known for taking risks and pulling off what might appear to be impossible, is in all likelihood the next chief of Twitter. A free speech absolutist, Musk calls Twitter a digital town square where matters vital to the future of humanity are debated. Our next report delves into his views to find out how Musk may shape one of the world's most influential social media platforms. Take a look.
Take a look at Elon Musk's tweet, which came at the same time as news that Twitter had accepted his takeover bid. He hits all the right notes. Sample the following bit. Free speech is the bedrock of a functioning democracy, and Twitter is the digital town square where matters vital to the future of humanity are debated. The tweet also had a short list of other goals: making Twitter better than before by enhancing the product with new features, making the algorithms open source to increase trust, defeating the spam bots, and authenticating all humans. In particular, the last goal, the one about authenticating all humans, has set off a lot of speculation over Twitter, not helped in the least by the fact that no details exist at the moment about how Musk proposes to do this, and there are legitimate and serious concerns involved. Take a look at what one leading expert has said on the issue, that too quite fittingly over tweets. Jeff Kosseff, an associate professor of cybersecurity law at the US Naval Academy, tweeted that there was at least a chance that authenticating all humans could compromise a Twitter user's ability to be anonymous. Now, Kosseff made it clear that he wasn't sure about what this stated objective specifically meant. However, with that caveat, he explained some of the concerns that could arise. Kosseff pointed out that at least some high-profile commentators had interpreted the authenticating all humans plan as banning of anonymity or requiring ID verification. Why would that be bad? Kosseff explained that Twitter's pseudonymity had made it possible for many people to speak publicly when they wouldn't have the luxury of speaking under their real names on Facebook. He gave the example of the LGBTQ community, whistleblowers, and political dissidents, among others. Kosseff said that even if people could still post under pseudonyms, the collection of identification data at registration would shut out many people.
Well, there is talk that now Twitter could potentially be introducing a KYC process. If that happens in the Indian context, then clearly there are going to be some legal ramifications. First and foremost, Twitter is an intermediary under the Information Technology Act 2000, is mandated to exercise due diligence while they discharge their obligations under the law. Twitter is not obligated under law to collect the sensitive personal data and personal data of users by means of the KYC compliances. But please understand, there is also no bar or restriction on Twitter to effectively go and collect such data. The only Caveat is that in case if Twitter is collecting any such data, then Twitter will have to ensure that it complies not just with the parameters of the Information Technology Act 2000, but also rules and regulations made thereunder, specifically the Information Technology, Reasonable Security Practices and Procedures, and Sensitive Personal Data or Information Rules 2011, as also the Information Technology Rules 2021. And if it does so, actually speaking, it can be argued that such a process is nothing but an exercise of due diligence and will help the government to attribute specific tweets to specific humans who are actually behind such kind of Twitter handles. But it will be interesting to see how the final developments in this regard take place.
Mind you, this is one interpretation among others of what Musk might have meant, but many Twitter users are still worried. Note that Musk has called spam bots the single most annoying problem on Twitter. Even if Musk literally meant authenticating a Twitter user as human, it is not necessary that all methods Twitter could adopt to do so would have a negative impact on user privacy and anonymity.
Detecting a bot as a bot is actually usually a lot easier than detecting a human as a human. Here's what I mean. Bots tend to be set up in order to do specific tasks, that is to amplify messages by specific people. They usually have a very high volume of very focused tweetings. They are often all set up at exactly the same time or very close to the same time from exactly the same IP address or from very contiguous IP addresses. All this is very easy, very easy to analyze at the level of a network and to figure out that, all right, this is 99.999 certain to be an inhuman account, a bot. And if it happens to be focused on a specific subject, to also figure out who is likely to have set up the bot. And there are other more sophisticated methods such as analyzing the language used, etc., which can help detect them. So if you're actually trying to detect human versus bot, it is easier to focus on the bots than on the humans.
But why would people jump to such a conclusion? After all, Musk could simply be suggesting that Twitter's verification system be modified. All the speculation might be arising due to the political context, especially in the West. Take the example of the United Kingdom. During the pandemic, there have been growing demands in the UK to prohibit anonymous social media accounts, with the belief that anonymity provides a cloak to those engaging in online abuse and racism, among other hate speeches. This is an opinion shared by many across the world. However, research has shown that people are still likely to abuse each other over social media even if they don't enjoy anonymity. As of February 2021, Twitter has 15 million users in India. What Musk means when he says authenticating all humans will have consequences for many of those who depend on anonymity to engage in sensitive political, social, and religious matters online.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Back home, India Inc. is also witnessing mergers and acquisitions. After PVR and Inox, the news of HDFC's merger with HDFC Bank took many by surprise. While experts believe that the trend underlies the desire of India Inc.'s cash-rich companies for inorganic growth, they are also cautioning investors. Now, how can investors benefit from this trend? Let's find out.
The deal market is buzzing with a spate of mergers and acquisitions being announced by India Inc. Starting from PVR Inox to HDFC Bank, the Indian corporates have seen big names announcing mergers. And the list doesn't end here. Larsen & Toubro Infotech and Mindtree could be the next in line, while JSW Group, Adani Group, Ultratech Cement and Shree Cement have reportedly shown interest in acquiring Holcim's Indian assets. Wipro Limited has also announced acquisition of SAP firm Rising Intermediate Holdings. On the board says, shares of these companies have remained volatile, reacting to every news flow. But the key questions remain as to why is there a flood of M&As right now and how can investors benefit from them. According to Dinesh Arora of PwC India, the trend underlines India Inc.'s cash-rich companies' desire to expand and eye inorganic growth.
What has happened from the demand side, let's start first, that 2020 was the year when a lot of companies went for cost cuts and reducing their overheads and increasing efficiency. What that has led to is very high availability of cash with the companies, and therefore we have a set of people in the country, set of companies in the country which have got cash available for expansion. 21 was a year when people started investing in growth. So people from mindset perspective are ready for growth, and from availability of funds perspective they have availability of capital. The second thing which is on the supply side is which is a problematic thing which has happened is that lot of companies after COVID were not able to improve their situation, and therefore they are still struggling, and therefore they want to get out of the business, or they need to find a person who can take over the business. The second thing is also, which we have seen in some of the Indian promoters, is they are very much amenable. Their priorities in life have changed and they are amenable to selling out. So that speed has also increased. So these macro factors, I would say, on the demand and supply side are driving the pace at which and the volumes that you are seeing in the market as of today.
According to a report by Refinitiv, M&A activity hit a 4-year high at $30.3 billion during January-March quarter of 2022, bucking the global trend where deal making fell sharply. Deal activity grew by 5.6% year-on-year in value terms in the first quarter of calendar year 2022, making it the highest quarter period since 2018 when it was $31.1 billion. In volume terms, the M&A activity grew 29.6% YOY, making it the best ever quarterly number. Yet, Utkarsh Sinha, Managing Director at Bexley Advisors, says India Inc. has a long way to go in terms of maturity of M&A activity.
The first wave of M&A is almost always driven by horizontal mergers. The idea is to get growth in scale and a reduction in competition, reduction in the cost of acquiring customers. The second wave follows after that, which is more of vertical mergers, where companies try and integrate into their supply chain and make sure that they're able to drive some reduction in costs. That is followed by a third wave, which is conglomerization, which sees the rise of companies like General Electric, or in India, Reliance to a large extent has experienced that. The fourth wave is driven a lot more by financial sponsors. So it's private equity, LBO driven, and it's oriented on unlocking value. It's oriented on delivering returns. And the fifth wave is finally mega deals, where companies start crossing their border acquisitions. They start they start having global aspirations. India is still in that first wave. On a larger perspective, on a macro level, India is still very much in very early stages of the M&A boom, and I think a lot of that is driven by the fact that we do not yet have a very mature capital market in India. Whether it's the public market or the private market, the amount of money and the amount of and the number of players in that space.
Sinha says the recently announced mergers fall in the horizontal M&A category, which is driven by saturation in scale, aspiration to grow via absorption of competition, or driven by individual sponsors or investors. So, if you wish to benefit from these M&A activities, here's what you need to be mindful of.
Investors will have to be cautious that not all mergers and acquisitions are driven by choice. Some of them are forced. Some of them are just for very defensive reasons. And these mergers will not create value or as much value that investors would expect to translate into their returns. So even long-term investors will have to very carefully assess the real reason behind a merger and the potential upside, and also the risks of the mergers not working out.
That apart, investors should assess each M&A deal based on synergies and valuation.
Even way back in 2000, the Satyam Mehta's fiasco has taught us that shareholders have been quite active in understanding that they can't be easily fooled, and they are quite open to opposing deals that are detrimental to their interests. So, but again, this doesn't mean that every merger is against the shareholder interest. We need to look at every deal individually, and investors must definitely avoid taking positions based on initial news announcements.
In nutshell, deal-making activity including acquisitions, divestitures and alternate M&A strategies will be robust in 2022. Investors, however, need to be patient and look for long-term benefits before betting on them. On Wednesday, stock-specific action amid March quarter earnings will drive the markets. Bajaj Auto, HDFC AMC, HUL and Indian Hotels are some of the prominent companies slated to report their quarter 4 numbers. That apart, global cues and cabinet decisions will guide the markets.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After markets, let's turn our attention to a technology which is very crucial for the success of electronic vehicles. Advanced chemistry cell batteries may soon be manufactured in India as well, thanks to the government's PLI scheme. These cells account for 80% of the cost of lithium-ion batteries. Watch our next report to know more.
A nascent technology has now emerged as the crucial key in the world's fight against global warming. Tiny advanced chemistry cells, which are used in lithium-ion battery, will play a big role in cutting short the world's dependence on fossil fuels. The world is racing to tame this technology and make these batteries efficient and safe. India, which imports these batteries, is also taking baby steps in that direction. The government last year launched the National Program on Advanced Chemistry Cell Battery Storage to reduce import dependence. It has announced a production-linked scheme for potential manufacturers and has got good responses. And one of the bids has surprised many, including the industry giants like Reliance Industries and Ola Mobility. Rajesh Exports, the country's largest gold jewelry exporter with no prior exposure to battery making, has emerged as one of the 4 companies that have been declared eligible for an EV battery manufacturing PLI. Advanced chemistry cells are the new generation technologies that can store electric energy either as electrochemical or as chemical energy and convert it back to electric energy as and when required. Globally, manufacturers are investing in these new generation technologies at a commercial scale to fill the expected boom in battery demand over the next decade. Consumer electronics, electric vehicles, advanced electricity grids, solar rooftops, etc., which are major battery consuming sectors, are expected to achieve robust growth in the coming years. Several companies have already started investing in battery packs, though the capacities of these facilities are too small when compared to global averages. 4 companies, including Reliance New Energy Solar, Ola Electric Mobility, Hyundai Global Motors Company, and Rajesh Exports Limited, were selected last month to receive incentives under the government's 18,100 crore rupees production-linked incentive scheme. They will have to set up the facility within 2 years. The government program is designed in such a way that it is technology agnostic. The beneficiary firm is free to choose suitable advanced technology and the corresponding plant and machinery, raw material and other intermediate goods for setting up cell manufacturing facility to cater to any application.
यार आइसक्रीम खाएं? नहीं यार, कुल्फी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
अरे SBI contactless debit card? I agree.
SBI is the banker to every Indian.
Surprisingly, Rajesh Exports has also applied for incentives to set up a 6th generation display pack plant to make AMOLED display panels that are used in smartphones. That's all for today. For more news and analysis, please log into our website www.business-standard.com. And we'll also be back tomorrow morning with more. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.